Kotak Mahindra Bank surges almost 10% today after reporting a better than expected set in the third quarter. The bank's net interest margin grows to nearly 4.93% versus 4.9% quarter on quarter. Slippages come in lower than analyst estimates. It's a beat on all parameters.
Wipro rallies after the company's Q3 constant currency revenue growth beats estimates, coming in at around 0.1%. The management tells CNBC-TV18 that they see discretionary spends coming back, but slowly.
Vodafone Idea shares locked in a 10% upper circuit after hopes of some relief coming in at the AGR dues matter. Sources tell CNBC-TV18 that the government is considering waiver of penalty interest component after telcos had reached out to government seeking relief with regards to the AGR dues. The stock now crosses past that 10% mark, up around 11.5%.
Sugar stocks like Sri Renuka Sugar and Balrampur Chini, they trade high after the government sources tell CNBC-TV18 that India is likely to allow export of 10 lakh metric tons of sugar after factoring in all estimates of sugar production and currently available sugar stocks.
Rallis India shares decline after the company reported a challenging third quarter driven by subdued exports, pricing pressures, and the revenues for the company declined by 13%. Margins as well fell by 200 basis points to around 8%.
Hello and welcome to Chartbusters. I'm Nigel and with me is Mangalam. And the start to the week has been in the green. So you have all the top indices, as you can see to the top of the screen, that are currently trading in the green. It seems in the near term we're still in a bit of a range, but I think the big trigger will be Trump taking office overnight. So that's going to be the key factor we'll track. Hey, Mangalam.
Good morning, Nigel. You know, on Friday we had the banks and the IT stocks drag the Nifty. We had Reliance support the Nifty. And today we have the banks doing a lot better, over 1% higher, led by Kotak Mahindra Bank. And some of the financials actually picking pace as we speak as well. Case in point, something like a Bajaj Finance, which too has moved to the high point of trade. SBI is doing extremely well. NTPC from the front line and the PSU space itself has picked some pace. So we'll keep an eye out on how the markets perform, because after Trump takes over tonight, thereafter we will, start getting a build up to the budget as well, the expectations, etc. We'll keep an eye out on the way the market moves forward too. The mid-cap index, though, slightly undecided, mildly in the green right now, with a few more stocks advancing than the number of stocks which are declining. So the crisscross lines come up for you. As we speak, we have at the bottom of your screen numbers coming in from Paytm. On the bottom line, the company's made a loss of 208 crores. This compares to the loss of about 220 crores. So not much amelioration in the losses, but one would say that there hasn't been much decline as well. Keep an eye out on some more details that come by from Paytm. On the bottom line, the company continues to be loss-making. This quarter, it's been about 208 crores, comparing with about 220 crores. As we get more details, let's also welcome Shivangi Sarda of Motilal Oswal Financial Services for a quick technical check on the market. A big up move is what we're seeing on the Nifty Bank, Shivangi. Before we talk about the markets, also congratulations on the personal front.
Nigel, thank you for having me on the show as well. And thank you for the best wishes. Of course, we've seen that the markets have, made a good upswing, and we are seeing some sort of recovery. But then again, it's got stuck in a very narrow range, and there is some sort of rejection at the higher zones, lack of follow-up buying, and a lot of global concerns, which is making the markets a little wary. Now, India VIX is now concerning, and it is comforting the bears at this moment. So any small bounce is not being able to sustain at these levels. So we are expecting some swings in this range-bound manner. Of course, banking stocks are, kind of contributing to the Nifty index. But we are seeing some call writers still very rigid at 23,500. So this will be the next resistance and very difficult level to, surpass as of now. So 23,500 is the upper, level that we're looking at, with a support of 23,000 levels. So going to be a little volatile. We'll have to fasten our seatbelts for that. Now, talking about Bank Nifty, we've seen, some of the heavyweight banking stocks are now contributing. Some of the smaller names have also done very well last week, which are contemplating to this index. We are looking at 50,000 as the next marks for Bank Nifty. But of course, there is a short covering move required for this fresh leg of rally to start. But of course, the broader market is a little bit of a pressure. So there will be some sort of capped upside over here. But 50,000 is what we're looking at, with a support of 48,500 levels. Now, of course, there will be volatile swings, so one is required to do a hedge strategy in this kind of a market.
Okay, got that. Hi, Shivangi. Congratulations from my end as well. And fill us in with a couple of your picks.
Thank you so much, Nigel. So for the stock ideas, I am looking at NTPC, which is the first pick on my radar. Excellent base formation over here at the level of 300 levels, and buying can be seen with volumes. Stock has negated the lower top, lower bottom on the weekly basis, and we are seeing a good doji formation, on the higher base chart, which indicates that there is very good pullback from the lower levels. Buying interest is emerging, right about the right levels and right time for this stock and this sector as a whole. So a lot of tailwind from there as well. So the stock is headed towards 350 levels with a support of 325 zones. So recommending a buy here. Now the second pick on my radar is HAL, which has seen around about 2.5 to 3% shorts covered on the Friday session. And today we are seeing fresh longs being added over here. So short covering move along with a long build-up follow-up is a very classic, example and a situation where this is a very good risk-reward over here. Now, weekly basis, we've seen that there has been a long consolidation and the stock has moved from its lower band, getting ready for a good up move. So I am recommending a buy here. Now, we are, sort of looking at the next targets of 4,300 with a support of 4,050.
All right, we take that point. Thank you so much for joining in and giving us all those details. Just a quick look at Paytm before we move further. The stock has taken a bit of a nosedive, currently down about almost 2.5%. The street perhaps not happy with the fact that there has been the loss which continues on a quarterly basis. And mind you, this is also the first time the company reports its numbers after being, the stock being entered into the F&O space. So we'll watch out for that as well. Came into the F&O only in the December series, and from there on, the first quarterly results that the company has reported, down about 2%. Let's get you some ideas for profit coming in from our colleagues at Money Control Pro. Neha Dave joins in with the stock.
Today's stock idea is State Bank of India. SBI has reported healthy performance in the current fiscal so far. The largest bank's credit growth has been very strong despite muted growth in the deposits. Management has guided loan growth of around 14 to 15% in the current fiscal, which will be higher than the banking system credit growth. While retail lending has slowed down, corporate credit has emerged as the fastest growing segment for the bank. Despite slower growth in the deposits, there is headroom to grow the credit portfolio at a healthy pace, and that is because SBI is relatively better placed in terms of credit to deposit ratio, which stood at around 68% on its domestic book as of September and which was significantly lower than the banking system CD ratio. While SBI's margin is relatively lower as compared to private peers, fall in operating expenses will support profit. Cost to income ratio will moderate as wage expenses have normalized. Moreover, the bank's asset quality remains best in over a decade, and credit cost is at a minimal level. A high provision coverage ratio also provides a lot of comfort. In terms of valuation, the stock is trading at around 1-time core book value estimated for FY26, which is very attractive given that return on asset is above 1% and return on equity is about 20%. While earnings growth may normalize, stock upside will be driven by expansion in the valuation multiple, that is valuation re-rating.
All right, with that, what we'll do is take a short break, come back on the other side. We'll put the spotlight on some big stock movers of the day. There is Kotak, there is Wipro. There are a bunch of them. We'll get to all of them after this break. Welcome back. Just before we went into break, the flash at the bottom of your screen, which is regards to Globus Spirits, the price for rice for supply to ethanol distilleries has been reduced from 28 rupees per kg to 22.5 rupees per kg. An important input for ethanol makers, grain-based ethanol makers, and which is an input for alcohol as well. So as a result of which the street believes that the cost of inputs would reduce from them, maybe flow through in terms of margin improvement, or perhaps into the customers as well for better volumes. Either way, it's a positive, and as a result of which the stock is holding on with gains of about 14%. Remember, opened with a big gain already and continued to hold in about mid-teens, and now we have some clarification, so maybe some explanation why the stock was doing well since morning itself. But the one that is exceedingly doing well today is Kotak Mahindra Bank, up nearly 10% on better than expected third quarter results. Abhishek joins us to tell us more. Abhishek, it is all guns blazing.
Well, all-round performance being better than analysts' expectation is what has spooked investors' interest in Kotak Mahindra Bank stock price today. So what's worked for them in Q3 FY25 is that the net interest margin has actually improved on a sequential basis, while analysts were pegging net interest margin to decline by 5 to 6 basis point quarter on quarter. The gross NPA ratio has come in at 1.5%, and that's thanks to slippages being lower than the previous quarter, while analysts were anticipating slippages to be higher by 200 to 300 crore on a sequential basis. So gross NPA at 1.5% versus Motilal Oswal estimate of 1.56%. Talking about business momentum is much better than analysts estimate. Deposit growth is close to 16% YOY, while Motilal Oswal anticipated the deposit growth at 15% YOY. Advances growth that has come in at 15.1% YOY, while again Motilal Oswal was anticipating a growth of 14% YOY. So with reference to the PNL, they have beaten our poll both on NII as well as the PAT front. Now we have brokerages who have written on the stock. Citi has written on Kotak Mahindra Bank. They have a buy recommendation, target price of 2070 per share. They have a 90 days positive catalyst watch which is remaining open for Kotak Mahindra Bank. Now ICICI Securities has upgraded it to buy from hold. They have also raised the target price to 2050 from 1850 that it was earlier. Anand Rathi has also written on Kotak Mahindra Bank. They have upgraded the stock to buy from hold, and target price has been increased to 2010 from 1950 that they had on the stock earlier. Back to you.
Yeah, all right. Thanks a lot for that, Abhishek. Well, just keep an eye out on the Paytm stock. The stock initially took a knock-off closure on 2%. But it seems the street is buying into that dip. Remember, things will be a little bit more volatile, as Manglam said, because it's now part of the F&O list as well. In the last few trading sessions, I was noticing that the open interest out there had swelled up as the stock recovered from around 800 to around 900 rupees. So we'll try to get further details with regard to this, set of numbers. But at first, it appeared there was another income that bumped up the profitability on the bottom line. But now the street is looking at it in more minute details. And in fact, they don't feel that these numbers are so bad, I think so, because you have the gross mercantile value that's up closer to around 13%, and there is growth on a couple of other aspects as well. So we'll get a better analysis in just a bit. For the time being, let's focus on Wipro. Rima joins in to tell us what brokerages are making of those set of numbers. Rima?
Thanks so much for that. So Wipro's seen a very big up move, and now it's the best performing large cap IT stock in the last 1 year with a return of close to about 26%. A quick recap of the numbers. Q3 was a beat on revenues and on margins. The company's top line growth came in at 0.1%, ahead of the company's own guidance and consensus expectations. EBIT margins at 17.5% improved despite the wage hike impact, and this is the highest that we've seen in the last 3 years. And now the margins are at the company's aspirational band of 17 to 17.5%. And the third positive was the company has upped the capital allocation policy. So earlier they had committed to pay 40 to 50% or 45 to 50% of the net income over a 3-year period. Now that number stands revised higher to 70%. But some analysts believe that the Q4 guidance, that's for the March quarter, is unexciting at -1 to +1%. But here UBS comes in to say that for the past 2 quarters, Wipro has delivered at the upper end of the guidance, and the commentary has gotten more positive. Against this backdrop, the current Q4 revenue guidance looks rather conservative. They expect the company to deliver close to the upper end of the guided band. They've upgraded the stock to a buy from a neutral. Target price is a little higher, 335. The current valuation does not entirely price in the recovery in the consulting segment, and this could drive a re-rating. Macquarie says that Wipro is an easier firm to turn around compared to Tech Mahindra. Citi has a sell call on Wipro, but they've removed the negative watch list, the catalyst watch list on the stock. Nomura maintains a buy call.
All right, we take that point. Thanks a lot for that, Rima. That's about Wipro. Paytm now extending some of the gains, where the company says that the payment processing business will continue to remain in the guided range. Payment services revenue is actually up about almost 8% quarter on quarter, and financial services saw a big move by about 34% as well. So as and when we're getting some more and more details, the street seems to be liking that, and as a result of which we're seeing an up move build up on the stock as well. But in the backdrop of the Bharat Mobility Expo, our colleague Parikshit caught up with the MD of Ashok Leyland, Shenu Agarwal, who introduced the company's latest launch, an electric port terminal tractor that is still in the pipeline. What we do is we take a short break, come back, and we focus on a lot more in the market.
Welcome back. Let's turn our attention to the auto space. And in the backdrop of the Bharat Mobility Expo, Parikshit caught up with the MD of Ashok Leyland, Mr. Shenu Agarwal, who introduced the company's latest launch and an electric port terminal tractor that is still in the pipeline. Let's listen in what he had to say.
We are launching this Saathi diesel. We have been saying that for last 2 years we have been saying that we will come into the entry-level LCV segment, and this is our first offering. Now when we looked at this market very closely, we realized that the products that are available are actually, they have a lot of compromises. And I think these products were conceived about 20 years ago, and India and the Indian customers were very different then. You know, now the customers are very aspirational and they really don't like to make compromises. So we picked that idea and we said, okay, can we design a completely no compromise product, you know, but at a good price, because price is important for entry level. So we came up with that idea and now we have created Saathi.
Can you show us around?
Yeah,
what
sure.
this vehicle has to offer, sir? Please come.
See, when it comes to when it comes to power and torque, we are giving.
You can even come to the driver's seat here.
Yes, we have given double the power and torque on this. When it comes to loading area, we have given 25% more loading area. When it comes to again cabin space, we have given 20% more cabin space. So basically, the idea was whether it is power, torque, comfort, loading area, payload. You know, all the characteristics of product, can we give a very different offering, a very upgraded offering.
What's the price competition? How is it priced compared to others?
The price we have been able to keep very competitive. Of course, this is the initial price, but the price would be 6.5 lakhs for this variant.
Okay, and how many volumes are you expecting? What kind of market share in this segment?
See, we launched Dost and Bada Dost about 10, 11 years ago, right? And we have already achieved 20% market share in that 2 to 3.5 ton segment. And we are number 2 player now. So that gives us confidence that if we get into other segments of LCV, we can replicate that success. So this is a large enough market. The market is about 200,000 units per year. So even if we get 20% over next few years, that will be considerable volume for us.
Okay, 20% in the LCV market. Is that what you're talking about? Okay. Now, show us this vehicle. This is looks like a battery vehicle, battery energy vehicle.
It is. This one is an EV actually, and this is a very.
Why did you get onto it, sir? All right, Shenu Agarwal showing us a very interesting vehicle here at the Ashok Leyland stall. So, yeah, sir, tell us about this.
So this is a very unique product. As you can see, the cabin is very different. You will not see this kind of a product in India. Right, so when we were looking at EV adoption in the country, we found that in the port terminal segment, you know, this is going to be really, really very popular.
Okay.
And the reason is that in port terminal, the tractors or the trucks, they operate in a very confined area.
Right.
Yeah. They operate in a very confined area, and therefore this whole issue of charging infrastructure is not very valid there. Okay. Yeah, so if we create a real port terminal tractor, which is electric for this application, we think that it will create a lot of adoption of EV. So that is the whole concept behind this. But
So it's a port terminal tractor, and this is an electric vehicle.
It is an electric vehicle. It's a port terminal electric vehicle. It's first of its kind in India, and we think that, you know, when we look deeper into this market, we realize that it's not only not just creating an electric tractor, but we have to create a tractor which is very well suited for the market.
Okay, is it?
If you look at this cabin.
Yeah, let's have a look.
Yeah.
Akhilesh, if you can show us this.
Yes, if you look at this cabin, you can see that from the seat. You can get a very 360-degree view of the whole thing, right? Because if you are moving in very congested areas, you need to look all around, right? And therefore, this size of a cabin with windows all around, you know, then you can really move it very, very well.
Okay, so
and
this is yet to. And what's the battery capacity? What's the battery?
So battery can be changed, you know, according to the needs, but it can go like between 80 and 300 kilometers, whatever is required for specific ports.
And cost?
So very customizable for anything. We have not launched it, so we don't have a cost right now, but we would be launching it in the next 6 to 9 months.
Okay.
And then, but yeah, we will price it very competitively. The problem is not the price. The thing is that we want to actually have TCO parity with diesel with this truck, right? So if we achieve that TCO parity, then it can be a huge success.
All right, meanwhile, just keep an eye out on a couple of stocks which are reversing gains or losses. So at the top of the list is Shriram Finance. Opened a lot lower in today's trading session. now is up around 5% from the lows, still sitting with a cut of about 2%, but from the lows of the morning, it's up 5%. The other one we're looking at is IndusInd Bank as well, which too has recovered all its losses from the morning. Remember, over the weekend, we got the news of the CFO resignation. From there, the stocks moved marginally into the green, now just around the flat line. And then we have a couple of stocks which were gaining and are now selling off a little bit from the top. Case in point, something like a Vodafone Idea. When we started the show, was up around 11.5%, now has given up just about 4 or 5% from the highs. We'll keep an eye out on this one, up sitting with a gain of 8.5%. The other one is Kalyan Jewellers. Saw a bit of a bounce after a 40% rout last week. And from the highs, that stock too has seen a cut of almost 2%. So we'll keep an eye out on a bunch of these stocks which are on our radar. With that, we're out of time on this edition of Trading Hour from on Chartbusters from Nigel and me. Stay tuned because the team of Trading Hour comes up after this short break.